Good morning and welcome to today's edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope everybody is having a good morning today and had a great trading day yesterday. Although, not everybody's got a different definition of great, and some people were in the shorts and some were in the longs, and so I want to kind of dissect it all. For those of you that are new to the channel, we look at the same 10 to 12 futures markets every day, but the key is we leave the lines on the charts just so that you can see how trades develop over time. Now, I will tell you, today is a day that we're going to be erasing a lot of these lines. Now, by the way, just because we have lines on the chart doesn't mean we're going to take every single trade. You certainly have to find your style in what happens when price reaches your particular area. So let's go ahead and dive right into it. Yesterday on the video, one of the things that I had talked about was I did believe that we had a better chance at continuing to fall, but I thought we'd get a little bit of a bounce. And I thought wrong, frankly. I will tell you, though, a lot of people, what's the word I want to use? I don't want to say overreact, but sometimes it's tempting to overtrade these kinds of things and try to pick the bottom. I definitely got stopped out of my first short. I really felt pretty strongly about the 2,700 number. I felt like 27. I kind of felt like 2,700 would be the number where we would hold, and we didn't. And so none of these other trades that was set up, and one of the things I'm a big believer in is set it up and turn it off and walk away and don't look at it the whole day. Because if you're looking at it the whole day, you're going to get emotionally overreacted. So in reality, all of these levels fell through. Now, there is a lot of feeling. I had a great talk yesterday with a very good friend of mine, and we were talking literally last night, and he brought up the point that a lot of this is it's a very good possibility that a lot of this is algorithmic based trading, where there are a lot of algos that have just wind up triggering a bunch of other stop losses, which makes a lot of sense. But that being said, we did come down. And we have bounced off a couple of areas, and we did bounce off this low 25.29. I'm not going to tell you that I was there to take it, as it was in the middle of the night. And even the size of this move from 25.29 to 26.41 is 111 points. So that should just tell you the kind of big moves we're getting, and that was 111 S&P points in 1, 2, 3, 4, 5, 6 hours. I tweeted out earlier today, when I woke up, we were down 5, and then we were up 10, and then a little bit ago we were down 25, and now we're only down 16. And so these are really big moves. And what I would tell most, especially if you're a newer trader and you've never traded in volatility, don't. Just stay on the sidelines during this, or stop trading the S&P. And there are still other opportunities in currencies and in gold and in all the other markets that are out there, to just stay out of the equity markets a little bit, to kind of remove some of that. So as far as what I'm looking at today in the S&P, I will tell you, I'm not putting anything on. I've got some positions on for my longer term accounts, and I will talk very quickly about longer term positions. So in the longer term scheme of things, looking at the S&P on a longer term scale, if we look at the weekly chart of the S&P, we did come to the area that I would consider a potential fair price value area and a potential reversal. Now, it looks like we're going to open up below that this morning. And opening up below that this morning is going to put us right at about my stop loss point for some of those longer term positions. Now, looking at this on a weekly chart, I don't often take a look at indicators, but we've just pulled back to the 20-week moving average. Traditionally, the 50-week moving average is what a lot of investors will use as kind of their benchmark point. If you take a look back historically on a weekly chart, we typically stay above that 50-week moving average for fairly long stretches of time until we kind of base and consolidate. And we've not even pulled back anywhere near that 50-week moving average. So for longer term, more position style traders, we're at a kind of an inflection point. If you're more of an investor, there's still plenty of room before our next fair price area as investors. So when you go up super, super fast, you've got to be willing to have a bigger wiggle room for volatility as it comes back down. I will tell you, I just didn't expect it all to happen in 2 days. And that's really the magnitude of the move that we've had over the last couple of days. So just kind of keep that in mind. I think especially for those of you that are not comfortable trading in this volatility, don't try to do so. And also make yourself a rule. If you've got an entry and it gets stopped out, if you only want to take the one for the day, then only take the one for the day. Don't force yourself into trades that you're going to be uncomfortable with overall. So going back a little bit on the hourly chart of the S&P, there's just nothing in here that I'm going to be willing to even take a flyer on right now on the hourly time period. I just think it's not a bad idea to sit and let the world pass you by or look at other markets for other opportunities. Same thing goes with the Nasdaq. So I'm going to get rid of some of all of my Nasdaq lines, as we had essentially the same move in both markets, blowing through the areas. Now we still have an area down here in the Nasdaq that was formed a while back. Let me get enough time on here. So as I go all the way back, this area here in the Nasdaq was formed back in early November, where we had this area. Now it's been touched and almost hit a few times back since, if you would, looks like early December, where we almost came into it. So this, if you want to try to hit this one right here, you've got a little opportunity in this area here. We've also got another 15-minute level back there. So this is cleaning up our charts a lot as we get rid of some of all of our older positions. But we have definitely fallen through pretty much every one of our buying points going down. So, I make the joke, don't tug on Superman's cape and don't pull on the wind and don't short the all-time high. Well, we're pretty far off the all-time high now. So, if you are so inclined, we did put in a little reversal here in the last few hours that you may get a bit of a reversal right off the European Open. And then really the markets rallied up until the European Open in the futures and then sold off. So you may get a little bit of a reversal back into this European Open area. If you do want to take a short, that would be maybe a chance to get in on the European Open. Crude oil. Crude, we've almost come into our short. It's not, or excuse me, our long position. It's not quite met entry. Remember that on this crude oil long, this is a confirmation entry. So we wait for price to enter and then we get long as it comes back out. But there's really nothing else to add on that. Gold has held up pretty well through all of this market volatility. The gold bugs have been saying, "See, I told you so." And when I look at it even on a weekly time period, gold has held up through most of this volatility. For those of you that have listened to this for a while, I've actually, bigger picture, been fairly bullish on gold, and I think I'm going to be, moving some more into that realm as this kind of that flight to quality piece. But overall, looking at this on a 1 hour chart, there's still no new levels that I would add. I had spoken about possibly adding this as a potential short the other day, and some of you may have been able to catch that. I'm not sure if you were able to catch that little short off of that area there, but I did not have those lines drawn, so I'm going to leave that thing off. And there's really nothing on here at the moment I'm gonna mess with in gold. So where do we start to get something to do? Well, let's look at our bonds. So looking at our treasury notes, so looking here at the bonds, we have rallied up hard, did not quite rally up to our short entry. This, if you remember, was the breakout short that we had here, and price just continued to fall from that area. We have not yet rallied up to the only level that we've got identified on the chart. We said this was a potential, but really this is the only level we have identified on the chart. So keep that area in mind later today. If you do want to potentially take a short here on the bonds, or there's a breakout long above here, above this 123.05. Looking at the Aussie, so the Aussie yesterday we had talked about the long trade, and price had rallied up off that long. And if you watched the video yesterday, we said take your stop and move it to here. And the reason we said that was because it felt like we were going to come off, and that's exactly what happened. So the Aussie trade, hopefully you're able to catch a little bit of a profit on that, as it now has fallen through that particular level. There's still a good selling area up here at 7992. going forward, but there's nothing down here that I like for a potential buying area. If you do want a smaller time period chance to get short, we actually put one in just a little bit ago, right in here on the smaller time frame. If you are looking at a smaller time frame potential short opportunity. So keep that one in mind going forward. And you'll notice you don't see the same huge swings of volatility in the currencies that you're seeing in the equity markets. The euro, we've got our little demand zone in here. The area to buy down in this area. Price has not come back into to that area of support yet. There is maybe going to be some stalling point here at the 123 area. But I think your better buying opportunity is somewhere down in this region here. And then the Canadian is continuing to move. But we didn't like, if you remember, I said I didn't really like any of these particular areas. And the reason I didn't like any of these areas is because they all look like they've been kind of pulling from each other's, order stacks, if you will. And there's not as many good opportunities. That being said, I think if you wanted to look at a smaller time frame entry, kind of like what we just looked at in the Aussie, you may get a little move off of about this area here. So a couple of decent potential short opportunities in those currencies. Let me change the color on this one. Both in the Aussie and in the Canadian. If you're catching this early enough in the morning and price hasn't gotten to those areas yet. Great British Pound, Japanese Yen. Looks much the same. We're still in between our buy and sell points in the British Pound and the Japanese Yen. Copper came up into our area, but this we'd said is a confirmation style of entry, so you need to trade a third of the way into the area, and we did not get into there. So that one you probably did not get filled on unless you had an initial entry set up. So it was a tough day for a lot of traders. A lot of traders had great days. A lot of traders had really bad days. What I'll say to this is, never get too happy, never get too upset, because if you allow your emotions to get involved, then you can't make logical decisions. And my logical decisions are going to be based upon where are the areas that give me the highest degree of probability with the least amount of risk. And right now, with the markets as volatile as they are, when you're getting these swings, just to put it in perspective, when I started speaking here a few minutes ago, we were down 30. We're now only down 6. Now that's 25 points in the S&P. A week ago, the market didn't. 2 weeks ago, the market didn't even move 25 points for the entire week, and it's moved that much in the 13 minutes I've been recording this video. So you've got to be comfortable with a higher degree of risk when there's much more volatility in the markets. And if you're not there, there's nothing wrong with taking the day off. There's nothing wrong with taking the week off and then slowing down and allowing yourself to not get emotionally attached. So if you guys have any questions or anything I can do, send me an email, chuck@iiefinancial.com. Until tomorrow, I will see you soon. Thanks.